Good morning, everyone. I got to start this video right from my house. We're talking about UHT today, Underused Housing Tax. So back in June of 2022, the government passed a new law, a new tax that was meant to punish those people that did not live here, that owned houses, that were using them just as investment vehicles for their appreciation or artificially inflating the cost of housing. In my opinion, I think it's the middle class Chinese people that were attacked in this, and rightfully so. If they're owning houses in a place and they're not being utilized and we have a housing shortage, then there should be some sort of punishment or fee to go along with that goes into some kind of housing initiative. So that's what it was intended to do, but that is not what actually happened. What happened was the legislation was so poorly written that it potentially trapped a lot of Canadians, and I'll get into that too. That one was due April of 2023 for those people that needed to file that return. So regardless of whether or not you have to pay the tax, you have to decide first off whether or not you are required to file the return. Failure to file the return, I'm not exaggerating, is a $5,000 penalty per person, per property, per year. Okay, it is a huge deal. Can't even reason why it's $5,000. If it is $5,000, then maybe that should just be for the people that aren't Canadian. Other late filing penalties are like $100 or 10% of the tax owing or something like that. But in this case, it was $5,000, and that became a big deal. Nobody knew about it. Everybody thought that they didn't have to file this return, that it wasn't going to be an issue, and the CRA didn't get a whole lot of filings. So what happened was they decided that they were going to extend the deadline from April 30th of 2023 all the way up to October 31st of 2023. And then at the end of September, the CRA came out and said, hold on a second, you guys that have co-signed for a loan, or if you own rental property with another person, you might be considered trapped under this new legislation, okay? So the CRA was tasked with the job of enforcing these rules, but it's their interpretation that's going to determine whether or not someone gets punished for not filing that return properly. So that's all fine. September, end of September, early October comes around, our office early October, that they are potentially going to be hurting a lot of people with this crappy legislation. So basically the four things are, it asks you, first off, are you a Canadian citizen? And if you choose yes, then are you a member of a specified investment trust? Most people don't have those. We're not going to get into what those actually are. Are you a trustee of another type of trust? Now, that's where people that are co-signing for loans are actually getting trapped in this, because if you co-signed for your kid's mortgage and you're on title, because you have to be on title to co-sign that these days, they are considering you a trustee of a trust, which means that you have to file this return. Even though it's their house, they live in it, it's not underused, it's not any of that crap. It is just a trap, in my opinion. So then the next one is, are you a partner of a partnership? Okay, the big deal with that one was that the CRA is like, we don't actually know what a partner of a partnership actually means, or what we're actually going to interpret that as. So you can look at all these different facts. You can look at how you filed your tax return, the relationship between you and the other person or persons that own that property, whether or not you share a bank account, whether or not you've referred to yourself as a partnership to third parties, whether or not you're both on title, all that stuff. Now, there's 6 or 7 boxes. Every time that I looked at those qualifications on what the CRA would be looking at for a partner of a partnership, I could always tick 6 or 7 out of the 7 boxes. And that scared the crap out of me. So what we did in our office is that we made sure that every single person that potentially this might have hurt, we made sure to contact them. There's 800 people that we had to contact there. So we contacted all of these people to make sure they didn't co-sign for a loan. We made sure that they didn't have a rental property, and if they did have a rental property, make sure they didn't have a rental property that they hadn't reported. Remember, we got to get this all done by October 31st. It really threw a wrench into our usual mundane October. It made it extremely exciting, and for all the wrong reasons. So the way I looked at this is that if they are deemed to have to file this return and they didn't file this return, it's a $5,000 penalty. If they're deemed to not need to file this return, in the case of potentially a husband and wife that co-own a property, that's potential that's not considered a partnership. I advise my clients, if they wanted to get us done, we charge them, and if they wanted to do it themselves, we sent them the instructions and showed them how to do it. It's super simple for us, of course, but simple for you as well. If you look at the form and read it, if you need some instruction, send us a message and we'll give you a little bit of help. I know other accountants in the town that we live in, Medicine Hat, that are deeming this UHT and spouses as co-owners, and they're just saying, no, it'll be fine. But the truth of the matter is they don't actually know that for sure. They don't know that until they've requested a ruling. We're going to be requesting rulings for each of them because we have almost every single situation when it comes to a partner of a partnership and a trustee of a trust when it comes to a bear trust. That's the co-signing. If that happens, we're going to be able to take that information and actually create this is what the CRA has told us is a partner of a partnership, and this is the situations of where it applies. Now, the problem with that is that they were giving us different information. And the guy I talked to was very convoluted in his answers, and he wouldn't directly answer the questions, which I understand, but he doesn't want to be held liable for any incorrect information. And when I went through the scenarios with him, the recommendation was file the returns and then request a ruling and see what happens. Now, that pissed me off. I didn't want to have to do all that work. I wanted an answer, but because this is brand new, underused housing tax is not part of the Income Tax Act. It has its own definitions. Like, for instance, you'd think that underused housing would consider apartment buildings as a place where that's what they would be attacking because that is a high density place, right? No, any place that had more than 3 doors, 4 or more doors. If you owned 10 fourplexes with 3 of your brothers and it's definitely a partner of a partnership, it didn't matter because they're all fourplexes, which is absolutely ridiculous. You need to have your property tax notice and you need to have information that accountants don't normally keep on file. By the way, this situation, because it's not part of the Income Tax Act, is something that we didn't really know whose responsibility it was. Everybody wanted it to be somebody else's responsibility. I think it's the accountant's responsibility, but I understand, right? $5,000, nobody wants to be on the hook for that. Errors and omissions insurance companies were talking about how they're not going to cover if you miss this return because it's not part of income tax and it's not a normal thing. And so it was scaring the crap out of them too. But anyways, October 31st, we filed the last one. And I swear to you, I get an email minutes after we filed that one. And it's from Tax Tips, which is a wonderful place to go for information. I get an email from Tax Tips, and as the CRA has extended the deadline for the UHT filing to April 30th, 2024. And I had a little temper tantrum, pissed off at the CRA because they're messing with my life and the life of my staff and the life of all of my clients. 10 years ago, we don't file nearly the forms and elections and all the crap that we have to file now. And it's getting a little out of hand. And I think that a lot of my video series in the future are going to be things about how the CRA can do things better. So if you own a property and you are a Canadian citizen and you own that property with somebody else and you might be considered a partner of a partnership, you've co-signed for a loan for somebody, whether it's your child or a relative on a house and you're on title, please go get some advice. And if you're unsure, file the return. It's $1,000 per property, per person, per year that you don't file that return. I guarantee you that there are going to be tons of people that get fined this $5,000, and there are going to be court cases, and the CRA and in particular the Canadian government is going to buckle. Krista Freeland really screwed this one up when she made this legislation, and I don't really talk politics, but this is really bad. It's not doing what it's intended to do. It's intended to get that investment from foreign countries out so the prices of housing isn't inflated, right? It didn't do that. What it did is pissed off a lot of Canadians and made it more difficult for them to live their daily lives in a time that the world is going to shit anyways. It's really bad. Oh, I'm going to start swearing more. Take care of yourself, take care of your family, take care of your friends, and be well.